Good morning and welcome, everybody. Thank you so much for participating in today's Doral Bar Association monthly meeting called SBA Financing. We have two dynamic speakers today, Beth Herdegen and Richard McClintock. We are very excited about this talk today, having the environment that we're in right now where growth is it. This year in 2022, a lot of companies investing in themselves and plans for growth. So this comes at a right time for small businesses here in Miami and South Florida. I'm very happy to introduce Beth Herdegen. She is from SEDEPCO, Sunshine State Economic Development Corporation. Beth Herdegen has more than 25 years of SBA and commercial real estate lending experience. Beth is a Miami Beach native, has assisted hundreds of small businesses throughout the state of Florida and nationwide, providing SBA 504 and SBA 7A loans for a variety of industries. Beth has been associated with many different organizations as well. She's a founding member of the FLA-GGL and a past 4-year FLA-GGL board member, serving as a secretary of that organization. She has served as a chairwoman of the South Florida SBA Lenders Group from 2004 and 2007. She's been also a member of the Florida Statewide SBA Lenders Conference Committee in 2010 and 2011. She's also been associated with two SBA lenders, such as Zions Bank. So with having said that, I would also like to introduce Richard McClintock. He is not only today's also sponsor of our event today, Chase being a very generous sponsor of the Doral Bar Association and a longtime supporter of the Doral Bar Association. Richard can talk a little bit more about Chase, but I would like to talk a little bit about the expertise of Richard. He is the VP of SBA Solutions for JP Morgan Chase. He's an award-winning small business administration loan expert and has worked in economic development and commercial small business banking in the Northeast in Florida since 1989. Mr. McClintock has been involved in successful organizations and administration of SBA lending departments at 4 community banks with a mission statement of assisting small business customers taking advantage of these important loan program. Rich has been with Chase Bank for the last year, which is a top national SBA lender and a preferred lender under the U.S. Small Business Administration 7A guidelines. Without further ado, I'd like to hand the presentation over to Richard McClintock, and he can take over from here. Welcome.
Thank you very much, Shirley. It's always a pleasure to speak with you. The last time we spoke, we were talking about the part of SBA that was on everybody's front burner, and it was the PPP program. So, we've come a long way since PPP. Obviously, I was talking a little earlier about business as usual. We're back to business as usual. The PPP programs did work and worked in a way that, last night on a 6 o'clock phone call, we were talking with a interior design group that said, had it not been for that program, that they would not be in business these days. They're buying a building now, for $2.5 million in, down in the Dade market. So, turns of fortune, and it was the right products at the right time, and also economic injury disaster loans too. They've popped up. They're a very viable way to to keep business in business. And it was all based around working capital. So, how to keep yourself floating for a period of, it started at 8 weeks, went all the way to 24 weeks. So, but what we're going to talk about today is the SBA products that you usually see, who they appeal to, why they appeal to them. I can talk a little bit about, Chase credit guidelines, but it's probably going to be more along the lines of just, what the program basics are and how to qualify for them. The who's and the whys are usually going to be, something that, 99% of small businesses qualify for U.S. Small Business Administration loans. So there's not a lot of businesses out there that don't. You know, it can be a small mom and pop operation. It could be a business that's doing, you know, possibly as much as $50 million a year in business, and they might be an international distributor of some kind of products. We reflect the market in Florida, just like, you know, it does in Texas and California. California is the #1 market in the U.S. Texas is the second, and Florida is the third largest SBA market, you know, in the United States. And then comes the Northeast, and then, you know, now all of a sudden the you know, central part in you know, up in the Chicago area. So, but you know, when we start with the products, you know, they're always going to be basic business products, and they're usually term loans, lines of credit, and in some cases, long-term with longer term loans, long-term financing for working capital, machinery and equipment, furniture, fixtures, you know, a variety of things, right to, you know, all the way to buildings. So, you know, we use the Express Loan program, you know, and we're probably one of the largest, if not the largest, express lender in the United States. We're involved with that, you know, on a preferred lender basis. As a preferred lender, we make all the investment decisions within the bank, and then we take that, you know, a step further and just send over a 3 or 4 page report to the SBA and tell them exactly what we've done. We underwrite according to their guidelines, and it's, you know, it's strict guidelines. This is kind of like Fannie Mae, Freddie Mac underwriting would be in, you know, in the residential area. You know, they give you parameters. They say stay within the lanes. We'll guarantee the loan. So this is kind of like, maybe it might be a little bit of a oversimplistic look at it, but it's mortgage insurance, you know, that's gone into the commercial area. And it's been a program that's been around since the 50s. It started as an original loan program for returning vets from the Korean War. And now it's turned into the #1 business advocate nationally, that puts out anywhere between 30 and 40 million or billion per year, you know, in guaranteed loans. And you'll hear a little later another program that we do. We partner up with SBA surrogate financiers around the United States with Chase, but here in the state of Florida, we've got 3 different partners, of which we've got Beth Herdegen, who's one of our partners, and she'll be on to talk about that one too. So the express loans are all done in-house. They're usually going to be a $350,000 loan right about there, or they can go up as high as $500,000. That became a permanent fixture last year, you know, after the CARES Act pretty much went away. They established that, you know, a $500,000 maximum. So you can get lines of credit literally up to a $500,000 that are guaranteed by the U.S. government. And, you know, they're done kind of as a, you know, it's an augmentation in some circumstances. We may be making loans to businesses that don't have, you know, extensive operating histories. In some cases, we do them for startups. Most of what we do is, you know, are you know, seasoned businesses. And in the SBA's eyes and in Chase's eyes, a seasoned business is a business that has 2 years of tax returns or more. And, you know, the Express Loan program is an easy way. It allows Chase to use all of its own internal forms and everything else. And for that, we get a reduced guarantee. So we do those for a 50% guarantee of principal. So if we put out a $100,000 express loan for someone who's starting a franchise donut shop, it could be, you know, 50,000 of that is automatically guaranteed by the U.S. government. So we do a lot of these, and we do a lot of them nationally. So the express loan, has the term features too, where you can do things not just like a line of credit would do, which a line of credit is great for, working capital and keeping your accounts receivable and your inventory levels funded. We go into term loans, and the term loans literally can go up to 15 years for leasehold improvements, machinery and equipment, furniture and fixtures. And in some cases, because, there's a lot of, in the market locally, there's a lot of commercial condos, office and warehouse condos, we finance those, also. And the equity injections, one of the reasons you use an SBA loan is you get a longer term. You can go literally up to 25 years when you're buying real estate, or maybe up to 10 years when you're borrowing working capital. And the flexibility of the Express program allows us to make those decisions in-house, and it's kind of like being able to act like a local bank. You can get the loan closed quicker. They fit a lot of different businesses, whether they're startups or they're seasoned. So it allows us to say yes a lot more, and that's what SBA is about. Is there's a credit box that all banks have. The SBA overlay on the credit box makes it bigger and more robust, and we get more dollars out to to businesses that need it. So. But the loan program that you always hear about, is the SBA guaranteed loan program, and that's been around too since, and really in its present condition, probably since the late 70s, and it's gotten better and better. It's gotten easier to use. It's not the old, where you take a look at something that looks like a phone book, and it's actually an application for a loan. And they've got it down to now, it's about 3 pages. The majority of it is documentation. We need tax returns from customers, and we'll have an underwriting list that we'll send to a customer in order to facilitate, getting a loan into underwriting and getting it approved. But the 7A program, it's the stalwart of, I think when you see some of the business reports about job growth and job starts and things like that, business startups, you get that information directly off those applications from SBA, and they go through, into the Department of Labor statistics. So it's something that, has provided for a very long time, an ability to, maybe have a loan that there's a little bit of working capital in it, and it's for machinery and equipment, and you've got it in the same loan, or maybe it's a loan for a building, and you want to put furniture and fixtures into your new offices. You can do that with the same loan, and you can usually keep it at those longer terms. So in a longer term, with SBA, literally is up to 25 years on real estate, and usually machinery and equipment probably 15 years maximum, and working capital about 10 years maximum. So it differentiates itself from conventional financing in the amortizations that it has. And that all that does is, when you're stringing out that payment, over a period of years, it really reduces the impact on cash flow to the point where, the business is throwing off good cash flow. It's building a good balance sheet. It's retaining a lot of its cash instead of paying it out in, a shorter term note. So that's the theory behind it. And that's always been the theory behind, SBA. Back in the 50s, it was difficult to get a loan on a business, at all. And it was even more difficult to get long-term financing on real estate that was over 10 years. And this kind of reset everything. And I think about 5 years ago, the SBA came out with, the 25-year debenture and the 25-year financing, and it went over in a way that, you know, market just accepted it and said, we love it. And it's been one of our benchmarks for you know, Chase's entry into the real estate market, you know, in Florida. There's a lot of fixed rate financing that we've done. Chase does only fixed rate financing. We don't do variable notes, and usually, you know, guarantees are corporate guarantees and guarantees of any owner that owns 20% or more of the underlying companies. And that's kind of how we underwrite them. So the underwriting timelines are usually, you know, somewhere around sit down with a customer, get a package in their hands, you know, of a checklist and a corresponding package. That package comes back. It's usually within a 10 to 14 business day period that we'll have, you know, an approval or a decision made on whether we can move forward or how we're going to move forward. So it's pretty expedient from an underwriting standpoint. It differentiates itself from Express. We can underwrite Express literally in 2 weeks. So those kind of you know, those kind of, I think, enhancements have happened because excuse me, SBA has had a lot of technological benefits over the last few years too. They made some infrastructure investment. They've got a thing called E-Tran, which is, you know, sometimes a blessing and a curse, but you know, it's a way of us being able to interact with SBA, you know, on a basis where we know everything there is to know about one of our applications when we send it in. So, you know, they're you know, they've modernized. PPP, unfortunately, was a little bit of an iPhone 13 Pro Max talking to, you know, a soup can with string when it first came out, because nobody knew what to expect. But, you know, it kind of sorted itself out and literally put out, you know, almost, well, it was easily $1 trillion worth of credit that went through the SBA when they normally only do $40 billion a year. That kind of maxed out their, you know, their systems, you know, but they're catching up. They're coming back to work too. They, like us, were working remotely. We're still semi-remote, but most of the time we're in the offices now, and, you know, it's back to business as usual. So that's pretty much.
We actually had a pretty good question come up.
Yeah.
You know, you talked about guidelines. What are the actual restrictions to SBA loans? Are there any that you want to talk about or make us aware of?
Yeah, definitely. You know, you have to be a for-profit company. You can't be a not-for-profit. You know, eligibility is small. Small business standards are very, very, I'm not going to say loose, but they're very generous. The company has to have less than $15 million in assets. It's got to have less than $5 million in annual, retained income. So, and there was a benchmark out there too. It's, you know, businesses with less than 500 employees. That's a lot of businesses, you know, and if you take a look at the Florida business landscape, you see that that's probably going to be somewhere around, you know, 90%, maybe even higher. You know, Florida is a service sector economy. You know, a lot of businesses don't have buildings. They rent, they lease space on a, you know, an office, you know, or a commercial condo. And, you know, we're kind of trying to get them to convert now to ownership, especially with interest rates starting to turn up. You know, Fed came out and said that interest rates are going to be climbing, and they have been, you know, consistently over the last probably month and a half. You know, we've seen about a 60 basis point increase, you know, in the Fed funds rates, and they're going to reflect that even higher, because at this point in time, they're trying to dry up the money supply. There's a lot of cash out there, and the cash came through programs like PPP, and a lot of businesses did extremely well. They took money, they may not have needed it, but it bankrolled them. It helped them get through that tough period. And the last 3 years were unprecedented. At least in my history of being in small business lending, I'd never seen anything like it. So, but it got us. Yeah.
We have two other really good questions that perhaps pertain to you before we get to Beth. How long is underwriting for SA loans, and what are current interest rates for both programs?
Okay. Current underwriting, again, it has to do with a package. Usually you go in, you talk to a branch banker, or you talk to a BRM, a relationship manager at Chase, like Dora Golova. And Dora is a perfect example of someone who knows whether it's a conventional loan, that she can take it conventionally, or she can go ahead and say, we may need to do something here because you might need a little more time, for repayment. So maybe we should use the SBA programs, and she'll make some recommendations. She'll advise you, and it's something that's kind of up to you, but she'll get a checklist in your hands, and as fast as you can get the information back to her. Typically the underwriting periods are between 10 and 14 days. If they're simple requests, complex requests, we do business acquisitions, so we have to take a look at things in a little bit longer period of time. But generally speaking, it's going to be under, I would say, 21 days, for underwriting and issuing a decision as to whether there's an approval or a declination. And then after that, getting them closed usually it can take as much as 30 days with certain parameters in the real estate markets, because we're still under COVID kind of restrictions where appraisers, environmental companies that we routinely work with, they're still out there, and there's a delay. And there's also delays, within the infrastructure of SBA, but also within the IRS. Like right now, for us to do verifications on tax returns and use the 4506 forms, which verifies any customer's individual tax returns or business tax returns, it's taking literally 30 days. So we kind of bake that in. So all in all, probably maybe a month or less for, standard business loans. And then to get them, you probably get them closed maybe up to 6 weeks at the most. But the real estate deals, we still like to see real estate deals being written with a 60-day lead time, and then see the ability to extend a contract, another 30 days if a bad environmental comes back, if something with the appraisal comes back that's, a little askew, like it doesn't appraise at value. And we're seeing a little bit of that now where, the market's taken such a, it's so tight, and it's, it's gotten so widely spread, among business levels. Small businesses are buying, small condos. Big businesses are buying big buildings. So, there's still, and then there's investors out there that I'm sure a lot of you might represent that, are looking at 45 days cash to close, which makes things difficult sometimes. So.
We have another good question, and it looks like Lily also has a good question, but I wasn't sure if this would pertain to yourself or to Beth. Let me put the question out there. It started up business with 2 tax returns, great growth, making revenue at about $150K monthly, but still not in the quote unquote green. Can they apply for SBA loans for working capital?
Yes, they can. Usually when you've got a repayment source, you're going to need to, depending on if it's pumping out 150 grand a month, that's, those are some pretty, interesting annual figures. So you're going to try to assess what the you have to have a reasonable assumption of short-term profitability in the event that you get the loan. So it's not something that, it's not like venture capital where they're just going to fuel, a business that's going to grow level by level by level, and then not have profitability come in until it either achieves a specific revenue level, or, when people are modeling businesses right now, short-term growth, a lot of it has to do with Amazon resellers, everything from, web sort of, products that, obviously are out there on social media sites and things like that. You get really rapid growth. And we may ask for a customer, if they're asking for a working capital loan, we may ask for you to participate in that. And the SBA asks us to do that. And that's where, when you start up a business, we're asking for, probably 100, you don't get 100% financing. You're going to get maybe 75% financing, or maybe 70. Then you would be asked to come to the table with 25 to 30% of your own money. And it may be, just remember that banks inherently stay away from venture capital oriented situations. They have to, because of reserve requirements. So they can't take on something that looks like an incredibly risky loan. So, they'll try to find out where the repayment source is, which means individuals and the business, have to show the ability to repay the debt. So.
Okay. And Lily, did you want to address your question? And then we can turn it
Yes,
over
a couple questions. For the SBA loans, when you're looking at real estate, do you still have the occupancy, the 51% occupancy requirement for a business? I feel that real estate is so expensive in South Florida, and a lot of business owners would like to buy property, but would need some tenants in on that property, in that building, in order to be able to even afford the ongoing, or they might not need all of the space for their own business, but have the money to buy. Is there anything, anywhere?
Lily, I'm going to tell you that that's probably an excellent segue to my partner, but I'm going to answer a little bit just to kind of give it some context. 51% or greater is what any business that's buying a building has to occupy. So that 51% threshold is there for a reason. The SBA does not do income producing real estate. And it's not something too that you can get into a 51% tenancy and then have on the other side of it 49% of additional leases that are outstanding, and take those as income and underwrite it as an income property. You would have to be able to buy the building and at 51% be able to make the payments for the entire building. Do you get to use the income that comes in from the leases? Yes, you do. But you would have to be able to, your business would have to be able to substantiate purchasing it as an owner user. And you'd also have to have a plan to kind of move into the, the rest of the space at some point in time. Maybe not 100%, but maybe 75% of the building. So there should be an expansion plan there. Did that answer that part of the question?
Yes, yeah. Thank you. And also, are these assignable?
The notes are, when it comes down to, they're assumable. And it's typically, going to be someone of equal or greater net worth value that you'll find, and the businesses can assume, they can assume debt. Commonly, debt is going to be canceled out. In a business acquisition transaction, we usually see them reconcile all those notes before the new business, purchases the target business, or the business is maybe a partner buyout, where, you want to take care of, you want your name off, if you're one of the partners and you're selling to your other partners, that you want your name off, the debts. So they're going to reconcile that. But under SBA guidelines, it is assumable, but it's assumable to someone of equal or greater credit value.
Great, thank you.
Yep. Might be a good time to Beth. I think I heard her in the background there.
Yep, she's there.
Terrific. Beth's been both a associate of mine and a good friend of mine for way longer than we like to talk about, but it's got to do with years of being in this market down here. Two of us. She's a local from the Miami area, and like I said, she's got we work for Zions Bank together, for a while, and we've known each other, as associates and friends and Flagel board members, for well over, I hate saying it, but almost 30 years. I'll just put my hand over my mouth and say 30 years. So, but anyway, without Beth, you want to go ahead, Shirley,
Yes.
and introduce her?
Yes. Can everyone see my screen?
Yes, we can.
Okay, great. It has the SBA 504 loan program.
Correct.
Wonderful. Okay, I'll make it quick. The SBA 504 loan program is specifically for the purchase of fixed assets. That would be commercial owner-occupied real estate and large equipment. Did someone have a quick question? Okay. Okay, so as Rich was talking about the occupancy rules, you do need to occupy at least 51% of the property that you're buying with the loan. And our typical structure to buy a owner-occupied real estate is the bank is going to do 50%, i.e. Chase Bank. The SBA is going to do 40%, that's us. And the buyer comes in with 10%. So we are routinely doing 90% financing of owner-occupied real estate. We have fixed interest rates for the entire portion of the SBA piece, the 40% piece. Current rates, because someone asked that question, are 25-year fixed. Sorry. Oh, our 25-year fixed rate is 4.68%. I will say that jumped up a bit in April. Our 20-year fixed rate is 4.62%. And the SBA portion of that 504 loan will be fixed and fully amortized for 20 or 25 years. We talk about the SBA loan eligibility. Rich talked about that. For-profit business, owner occupancy, and a company making a positive economic impact. We look for favorable credit and personal history, industry and management expertise, and we hope to see historic cash flow coverage, but we will do loans based on projected cash flow coverage. We'll do startups. We talked about the size standard. If someone has more than a 15 million tangible liquid net worth, they're probably too strong for SBA loans. Or if their company shows an excess of 5 million a year in net income, 2 years in a row, they're probably too strong for SBA loans. Here we're showing eligible project costs, building equipment, buildings. You can purchase land and do a ground up construction. We just did one for a car wash up in the Tradition area in Port St. Lucie. Chase has a great construction department, by the way. We can add all fees related to construction into the loan. A new thing we have now is debt refinancing. We can now refinance other SBA loans with an SBA 504 loan. We can refi an SBA 7A loan, and we can refinance another SBA 504 loan with a new 504 loan. We can finance origination fees, interim interest during construction. We can finance closing costs into the loans. Chase and us normally always finance closing costs. and we can finance things like appraisal, environmental. You'll see here ineligible cost. We cannot finance improvements to space you're going to be leasing out. We can't finance broker fees, corporate costs, organizational costs. We do not finance rolling stock, autos, trucks, or airplanes, but I just financed a $5.5 million charter yacht. We can finance boats, believe it or not, with 504 loans at 90% financing. There's usually a 10-year term on the bank piece. Now, Chase can sometimes do 20 or 25-year fixed to match the SBA's loan. Here's an example. A business is funded. We can fund a multitude of business types. You'll see here, if you see the list there, and we do even assisted living facilities, hotels. We love industrial warehouse. We love medical, dental, professional office condos. We do restaurants. We do sports and fitness facilities, marinas, funeral homes. We even do golf courses under SBA 504. And a lot of our deals are rent replacement, where someone's leasing a building and now they're going to buy the building. We do a lot of those. And just to give you a quick idea, I'm just funding a $22 million construction of a ground up construction Hampton Inn in the Miami area. But yet we're doing with Chase a $500,000 refinance of a seller note for a chiropractor. So we can do loans, $400,000, $500,000. We can do loans up to $20, $25 million, to give you a range of what we can do with 504. So I just quickly went through that. Does anyone have any questions about the 504 loan program?
I do. What is a typical time period to be able to get to approval and then to close?
Okay, great question. We usually will be simultaneously underwriting the loan request. The same time Chase is underwriting it, we're underwriting it. We're looking at the same financial package from the borrower. Our underwriting takes less than 10 business days. And then we also determine eligibility for SBA. And we're the CDC. We also submit the loan to the SBA for approval. SBA is now taking 9 to 10 business days to approve a loan once we submit it to them. They were taking a calendar month during COVID or more, but now they're down to about 9 business days. So I'd say 25 business days to get underwritten by the bank and us, and then approved by the SBA, and then another 30 to 45 days to close the loan. And that allows time to get appraisal, environmental, title work, survey, and that fun stuff to close the loan. And we administer the SBA 504 loan program for the federal government. We're not a broker or anything like that. We're a not-for-profit 501c3, and we facilitate the 504 loan program for.
Beth, a follow-up question there. In this market, being able to win a real estate contract, be it a small piece of property to a major building, or even in that hotel arena,
Yes.
It's possible for a business owner to go in advance and get like a pre-approval for X amount, so then they can go shopping. Because I know when a lot of property owners get offers and then they learn that there's going to be SBA financing, everyone freaks out. Oh my God,
Yes.
this is going to take 6 months to do, and they
Right.
pass on the offer.
Right. We do see that, years and years ago, SBA loans took a lot longer. It's pretty streamlined now, but we definitely are seeing what you're asking. We see a lot of people swooping in with cash and buying properties like you're seeing in residential. As soon as a property comes for sale, boom, they swoop it up. We can give a customer an idea of how much they can qualify for by reviewing their tax returns for the business. However, SBA does not issue any kind of pre-approvals. We literally have to submit a fully executed purchase contract to SBA in order for SBA to underwrite. Because remember, the SBA is underwriting all 50 states in the United States at a one office in California. Chase will look at it and give you an idea as well, kind of a pre-approval. And you get them underwritten and approved as fast as we possibly can. But to Rich's point earlier, then we're also dependent on those third-party reports, appraisal, environmental, title company doing title. So we always got to allow a good 2 to 3 weeks for those reports to come in. Now, we will accept people pre-ordering reports. They've got to give a deposit to the bank, Chase, and they'll order those reports in advance. That's one way to expedite an approval. But, you know, we like for people to provide us with their financial package as soon as we can in the process. So we have an idea of what we're working with and how much they can afford.
Okay, and a follow-up, you said earlier for the fixed rate, that
Yes.
that was for the SBA portion.
Yes.
Is there another rate for the bank?
Yes. So an SBA 504 loan is going to be 2 loans, a loan from the bank. And I just scrolled, if you'll look at that attachment, structure of typical 504 project in the blue box, it says lender 50%. So your Chase bank's going to take a first mortgage on the real estate. They're going to have their own interest rate on that loan. SBA is going to do a 40% second mortgage. That was the fixed rate I was quoting earlier. So the SBA portion of the loan will be fixed for the entire term of the loan. And then borrower comes in with 10%. So on a 504 loan, a customer is going to have 2 loans at the end of the day.
So with
And
the
2
lender, is that a fixed rate as well, or could that be variable?
Chase never does variable rate loans. Other banks do, not all of them, but some. You know, as you can imagine, there's many, many banks and lenders in Florida and in the United States. Chase does do a fixed rate loan. And lately, Rich, you can attest to this, they're doing 20 or 25-year fixed rate on the first mortgage.
Yes. Yep.
And so then we do a blended rate. So something that we produce real quick, I'll tell you, we do a good faith estimate. Lillian, you call and say, hey, I have a customer, they want to buy a building for $1 million. In 10 minutes, I can send you back a good faith estimate. It's going to have the Chase rate, the SBA rate. It'll give a customer the idea of the closing cost. We estimate at 3% of the purchase price. It'll give the customer an estimated monthly payment and estimated annual payments on that loan. We can give you in 10 minutes.
Fantastic.
And Beth, having said that, here's an example of what about financing a co-working business where the owner occupies 51% of or more of the location. The subject property is a warehouse. Does that sound like a typical project or loan?
Yes, yes, we do so many warehouses, I could never count. Sometimes there's an existing tenant in a building, but as long as our borrower, our client is occupying 51% of the building, we can do that as a 504 loan all day long. And earlier, I think someone asked, can they depend on the rent to make the mortgage payment? We want to see our borrower that's getting the SBA loan be able to afford that mortgage on their own, because if you lose that tenant, we still want to be sure you're able to pay the mortgage on that building. But I have seen many customers that buy a building, let's say in Doral or Medley, and it has a tenant in it. As long as it's 49% or less, the tenant, the borrower can buy that building. But again, we can't depend on the rental income to service the debt on that mortgage. We want to see our client that applied for the loan be able to afford the full mortgage on that property.
Thank you, Beth.
My pleasure. Any other questions?
At this time, we can open up, and if anybody wants to just open discussion, unmute themselves and ask a question, this is a great time to do that as well.
Yeah, I have a question. I guess not just for 504, but any of the SBA loans. What are some of the most common reasons businesses may not qualify that try to go through the process but are, either denied or told come back to us later?
I mean, I'll start that one real quick. I've been with the CDC 14 years. I crossed over to the government side 14 years ago. I was a banker prior for many, many years. I have not had one loan decline since I've been at the CDC. Now, we do see banks occasionally decline customers. That would be, they're not showing the cash flow to service the debt. Let's say their business is showing huge losses the last 3 years. We don't see that very often. Another thing would be very terrible personal credit. If someone has a credit score in the 400s or 500s, they're probably not going to get an SBA loan. There's mitigating factors like divorces. We see medical reasons, but those are two of the main reasons I would see, or Chase might see a decline, is they don't cash flow the loan, bad credit, or unacceptable credit, maybe very low liquidity. The customer does not have much liquid assets going on for them. And then we do, and the banks and SBA do background checks on customers. They will find any kind of criminal background. We will also ask that question. We can get people cleared short of murder and bank robbery. I've never had a person not cleared. So if they had a DUI felony 20 years ago, some kind of grand theft auto 30 years ago, we can get people like that cleared. I just had a guy ask if he could get the SBA loan and he had been convicted of counterfeiting. And the answer was no. I could write a book. It was no to the counterfeiting. Yeah. But really it's cash flow, credit, and maybe bad character where a bank might turn someone down. But we really don't see a ton of declines, but they happen occasionally. I hope that answers. Or somebody that can afford a $500,000 wants to buy $1 million. But we will look at projections as well. Chase might not be as open to projections as the SBA is. Rich, you could opine to that, but we like to see the existing business be able to afford the mortgage they're applying for.
Yeah. Yep. Zach, the long and the short of it is we partner up, with Sedco, and obviously, if it's Chase clients, we want to maintain our relationship with our own clients. We know our clients well. Onboarding new clients sometimes is a little bit of a challenge because, there's anti-money laundering, know your customer, literally federally mandated, rules that are in place. So, we've got to do a little bit of, I'd say full disclosure being what it is. We've got to do our due diligence on a customer, but new ones, we onboard prospects routinely. We get comfortable with their tax returns. Chase is probably known for being a little bit more conservative, in the area of, maybe overreaching on a building, where some people might be happy, with giving an approval, in the millions of dollars, and it's going to stress the, the cash flow of the business. And if you understand some of the underwriting guidelines, there's a benchmark out there, and that's for every dollar of debt, you want 1.25 of cash flow coverage. That's standard conventional. SBA kind of gives us the ability to drop down a little bit. And also, to Beth's point about taking projections, we'll take projections on a building purchase if it's going to be, if they already, cash flow from a standpoint of being a, you know, a rent replacement. That makes it easy for us. So, but, you know, getting back to, it's the old, the old, cues of credit.
5 Cs.
Yep, 5 Cs. And, you've got to, you don't want a character issue. Cash flow is going to be the biggest thing that we look at. So if it can drive a payment and the business is doing well, and they've got a historic ability to show, cash flow repayment, we underwrite those quickly. So.
A real quick thing that just came to mind was also the gentleman that asked why loans are declined. We cannot do foreign nationals. If someone's a pure foreign national, not a citizen of the United States, has only a visa, they're not going to get approved for an SBA loan, but they can bring in someone who's either a green card holder or a citizen and partner with them at 51%, and then they can get the loan. So we can't do straight foreign nationals. I meant to mention that, but we do green card holders all day long for SBA, and that's an SBA rule.
Mm-hmm.
I have a few questions. I could have you here all day with questions, by the way. We deal with a lot of different clients. Our focus is the small business owner. We have a lot of restaurant clients and also contractors or new real estate investors, developers that want to make it a go. Is an SBA a place for these two businesses?
Restaurants, yes. We will do restaurants now, when they're buying real estate. And when you say contractors, I've done a couple of GC, general contractors, actually with Chase, but they're buying a building and sometimes renovating it for their own use, for their business, for their office. SBA won't do any really developers or investors that are looking to buy properties and then lease them out or develop them to lease out to someone else. We're all about owner, user, owner occupied.
Okay. And also for business owners who own, for example, a office condo and have a traditional mortgage on there, is there refinancing available through the SBA? Absolutely.
We do. And actually Congress was looking at refi for 504 for quite a few years. They finally approved it a few years ago for us to refinance. We can refinance private notes. Lillian, one of your questions with these fast contracts, sometimes people have to jump on a loan, on a property, or they're going to lose it. Someone can go ahead and acquire a short-term note, like a 3-year note, even a seller note, a 3-year note. We can come in and take out that note as long as it's 3 years or less. And then the customer was able to secure the property. We do that. Chase has done that with us. Sometimes Chase has come in with a short-term note to cover the short contract. Now, we still need time to underwrite that loan, but that is an option. And again, SBA 504 and 7A can refinance notes, conventional bank notes, seller notes, high rate market, private notes, seller notes, conventional, and even we see people get hard money loans, 12, 14%, so they could secure a property. We can take those out with a 504 loan.
Okay. That's a very good option for a business owner because typically these office condos or whatever property are usually on 7 or 10 years, and sometimes have a balloon payment at the end of them. So this is a long-term solution.
Yes, we're doing one now with a chiropractor with Chase, bought the practice and the building from the chiropractor who retired. We're financing his $500,000 private note that is going to balloon at the end of this year. So we see those a lot. We're seeing a lot more refinance now, a lot.
Mm-hmm. Hey, the other thing, Beth, too, is you might want to just reflect a little bit on, when we're partnering, when we're doing some of our projects have an element of construction in it. You want to chat about that a little bit?
Yes, so we will do construction and or renovations. You know, a client can buy a piece of land, a parcel, and then build a building, ground up construction. The process is going to be the bank, Chase, is going to finance the purchase of the real estate and all the construction. Then when they're finished, like this big hotel I'm getting ready to fund, they get a final CO, certificate of occupancy, and then SBA comes in and takes out 40% from Chase. So on all of these 504 loans, the bank is going to close on a property purchase, whether it's construction or a turnkey purchase. And we're going to come in 30 to 60 days later and take out the Chase conventional loan of our portion. So it can be a little confusing. Chase will do a bridge loan on a construction deal or on a regular purchase. Then we come in 30 to 60 days later and take out the Chase loan, the 40% SBA portion. But we do constructions. And by the way, an SBA approval is valid for 4 years, wow. 48 months. It used to be a year, years ago, and we kept having to get extensions when it was construction. This hotel I'm funding has been under construction 4 years because COVID hit halfway through his project. Many delays, the roof crew, the pool crew, the construction crew, the inspectors in Miami-Dade County all had the COVID. So we will wait, and they have 4 years to get it done. We don't want to take that long, obviously, but usually a construction typical project might take a year, maybe 2 by the time they get permits. And we also will do renovations. Your customer can buy a building that might not be retrofitted for their business type. We will finance renovations or improvements to that building to retrofit it for that business. And Chase will finance those renovations and improvements. When they're done, we'll come in and take out the Chase 40% that they finance. SBA does not finance any construction themselves. A lot of people think SBA is funding the construction. The banks fund the construction, and the banks order the appraisals as well.
Right.
So two questions regarding the hotel. One, how is a hotel different from a multi-unit commercial building where you are basing the ability to pay the mortgage on your room rentals? How is that different from a commercial?
Well, a hotel is a different animal. We do have, by the way, special use properties, and that would be things like hotels, gas stations, assisted living facility, car washes. They have to put, right. They have to put 15% down. Now, the hotel I was doing is a Patel family. They probably own 5 other hotels. They did provide projections and a business plan, but again, they're tried and true, historically cash flowing hotel operators. And that cash, the payment on that loan for a hotel will depend on the rooms. He already has reservations on a waiting list. He's probably going to open in May. And then, you know, all of the other loans we do might, whether it be a warehouse, an office, medical, condo suite, we're going to look at the cash flow of that particular borrower to, you know, to cash flow that loan by the operation of their business. And so, and then we will add back rent if it's a rent replacement. We'll look at their tax return. Oh, they're paying $60,000 a year rent. We'll add back the rent. Chase will add back most of the rent, but account for real estate taxes and insurance that a buyer will start to pay after they buy a building. If they're renting, they may not be paying those expenses at this time.
Yeah.
It's all on a case-by-case basis to answer.
So the other question I had for the 4-year approval, so in the case of this hotel, the construction costs have increased wildly. over the last 3 years. How does that affect the initial loan approval? Do you guys increase with the market?
We ended up increasing that, but about 2 years ago. That was done on a GC bid he received 4 years ago. Some of the cost went up. We actually did end up increasing that from an 18 million to a $22 million project. But I have a car wash that he got approved in 2021 during COVID, but not as bad as 2020. And then he is having, big increases in some of the cost and supplies. But if your loan was approved under the CARES Act during COVID, SBA is not doing any increases of those loans under the CARES Act. If you want to give up the CARES Act benefits, which was paying 3 to 6 months of loan payments and waive some of the fees, you'd have to give up your SBA loan approval and get completely re-underwritten for a larger loan. And we are accounting for COVID, by the way. We know people may have suffered in 2020. We're now seeing 2021 tax returns. We'll compare that to how they did in 2019 pre-COVID. And then, of course, 90% of our customers got PPP loans, the Payroll Protection Act. Most are forgiven, thousands of PPP loans. And we're seeing a lot of clients have the disaster loan, EIDL, economic injury disaster loans from the SBA. That's fine. SBA will subordinate to our real estate loans. And by the way, we only take the commercial building as collateral on 504 loans. We don't take the business assets. We don't secure it with any personal real estate owned by the borrowers. SBA 7A might reach for other collateral. SBA 504, we do not. We only take the building they're purchasing as collateral. That's it.
Yeah. Hey, Beth, I saw earlier that Ray had asked a question about equipment financing. Ray, are you still on?
Yes, I am. Good morning.
Good morning.
So we can do large equipment too, by the way, with Chase, with 504. Chase loves equipment.
We do. We do. We've done everything from nautical dredges to scanning machines. So it can be high tech, low tech. A lot of it has to do with heavy equipment is seriously heavy equipment.
Yes.
We don't do a lot of rolling stock. We're not going to do dump truck fleets or anything like that, or cement mixer fleets. But
right.
We used to in the past. We did quite a bit of equipment finance over probably the first. I would say the first 5 or 6 years I was at the bank. I've been at the bank coming up on my 13th year. So lucky 13. So at least it wasn't synonymous with 2020. So but
yeah,
but we do a lot of equipment finance, and we partner with Sedco on some of it. A lot of it might be manufacturing lines, things like that. Something comes to mind, and that would be a owner and a distributor of a storm window company that both distributes the glass and also manufactures the storm windows. And that was roughly $4.4 million worth of manufacturing equipment, and we were able to do it over a 20-year term.
SBA loves manufacturers. We love to help manufacturing.
Yep.
So this is an interesting question that Ray has. So he has a parking valet company, and I believe from your Ray question, you're asking, well, how about if I have to put in equipment in a hospital parking garage that I do not own so that I can provide stacked parking, for example? Can the SBA wrap their mind around that, because the equipment is going to sit on someone else's real estate?
Well, I mean, Rich, if we're just both looking at hangars, airplane hangars at airports where it's on leased land. That's going to be a case by case. Rich, you could address that one.
Yeah, I mean, it's it's got to do with the length of the term of the lease. So, I think it's kind of easy if you put it, the analogy being, hangars. Hangars have gone literally from 20-year leases now to 40-year, and in some cases there used to be the old 99-year lease. They sort of tailed that back with a lot of the the municipal authorities. So it would have to do with, I would say we'd probably have to see what sort of a lease it's become prevalent that, obviously parking is difficult, and stacked parking, especially some of the new systems that are coming out, are innovative and can turn literally, small parking lots into high capacity. So, it is something that the bank hasn't done any of those yet, but we'd probably look at the lease, Ray,
Right.
and we'd also like to see what the useful life of the, the actual lifts would be. So.
Right. Right. We do a lot of equipment in 10-year loans. We also have a 10-year loan for 504. We see a lot of equipment go the 10 years rather than 20 or 25, because to Rich's point, any equipment we finance has to have a useful life. That's at least the term of the SBA loan. But that's a case by case, Ray. We would look at that. But again, they're going to need to see the lease with the hospital. And in a case of default, who would have first dibs on that equipment? We're going to take the equipment as collateral, but we would have to review the lease very clearly by attorneys to see, who's got control over that collateral in a default situation as well.
Yeah.
So, but there's moving parts, but we would look at it. Yes.
Yeah. And there's things like landlord waivers that come in, into play, that if we can get an executed landlord waiver, it might be the difference between us being able to do it or not being able to do it. So.
Right.
That's great because we've already talked to management, and they are willing to sign any paperwork saying that the hospital will be responsible for anything. But we know that the garage itself actually has a positive cash flow and it's very profitable. So obviously we've had loans that were declined just because of the 2020 numbers, but 2021 looked very good, and compared to 2019 as well. So the only 2020 was the COVID hit, and obviously those numbers went down. But now we've seen such a positive cash flow that we need to put in these new equipments as soon as possible.
Yeah. And just let me segue into something here. You're talking about 2021 numbers looking good. I can tell you one thing: banks will underwrite quicker if the tax returns are prepared for 2021,
right,
as opposed to where we're sitting there looking at 18, 19, and 20 as being the 3 consecutive years. So if the 21s are even close to being done, and that's file, because it's putting your best foot forward. And it allows the bank a little, quicker response time. And it also gives the bank a much better view of what's happening, on a real-time basis with cash flow.
Right.
Yes, our numbers has already been submitted for 2021 taxes. I know my CPA is actually putting up together the personal taxes. So most banks want to see personal statements and income. Yep. So we're just waiting on that, and I believe he should be done by either the end of this week or by next week already submitted.
Right. And Ray, you mentioned financial statements. One of our key documents that we look at is a personal financial statement for our applicant. We want to see all of their assets and liabilities personally, and then we'll look at the 2021 personal tax return, and then we want to see the tax returns for the business, 20 and 21 for sure. And then now that we're going to hit May next week already, we are going to ask for a first quarter 2022 financial statement. It can be internally prepared, QuickBooks. We're going to look at the profit and loss and balance sheet for year to date 2022 now as well. which may help people that might have not done well in 2020. You might be killing it in 2022 now and you're back to normal. So it's
Yes.
full picture, you know?
That would definitely be great because yeah, we definitely see the numbers gaining momentum and obviously being in the hospital setting, there's a lot of revenue coming in. So that definitely will help the first quarter numbers.
Right. And, you know, we may ask you to give a paragraph about how you were affected or that business was affected during COVID. We were sending a COVID questionnaire out to all borrowers in 2020. But I will tell you that the SBA 504 program and us did 2 times the amount of loans in the United States than we've ever did in the history of the program since COVID. I have never been busier in 14 years here. So that says something
Amazing.
about the economy. We did twice the amount of loans we've ever done, including the government and the whole 50 United States. So I guess that's a good sign for the economy. So,
Yep.
Well, thank you for the hard work that you guys put into it because you're making a difference in a way, you know?
yes, thanks.
Well, thank you. This has been a really great presentation. I really appreciate your time and dedication that you put into this. Thank you for the visitors and guests that we had today. We're asking great questions. Beth and Richard, can you state for the recording your contact information for the
Sure.
people listening and want to, you know, contact you? Go ahead and, say it out loud because we don't have it on the screen.
Okay. Beth, you want to go?
Okay. All right, I'll do it real quick. Beth Herdegen, and it might be there, the spelling on my little Zoom box there, but I'm in North Miami Beach, Aventura area, 305-932-3434. And if you want to share that quick reference guide that I shared, I can email it to one of you.
Okay.
And you can distribute it to your participants if you wish. And it
Perfect.
has my phone number and email right on it.
What is your email?
It's B Herdegen at Sedco, SEDCO 504.com.
Thank you,
So
Beth.
B Herdegen, Sedco 504.com.
Thank you, Beth and Richard.
Yep, the best way to get a hold of me is usually text. So it'd be 561-346-3371. And then obviously, if I can pick up too, call me on anything. I work directly with Dora. So Dora, if I'm in another market, she may know where I am. And if you've got questions that are pressing and we need to get answers for you quickly, we can do that and respond very quickly. My email is Richard, D as in Duncan, McClintock, MCCLINTOCK @chase.com. And I'm going to get, I'm going to go ahead and get, the contact information sheet that's going to have some of the points that, some of the little salient points that I was making about the SBA Express program, 7A program, so you can take a look at it. So.
Wonderful. And
So who
Alex,
does
that's
the business owner contact first? Beth or Richard
or Dora?
or Dora?
Usually Dora. Dora's the, she's the tip of the spear when it comes to your organization. So if there's anything that, because she works such a multitude of products that Beth and I, all we do is credit. We don't do, we're not involved with anything else that has to do with cash management services, treasury, credit cards, anything like that. Dora, is much more of a generalist when it comes to that. We're the specialists that are behind the scenes that, work directly with Dora on preparing the applications and, submissions for approval. And Beth handles all that directly as a liaison between the bank and the SBA. So our customers are entrusted to, to Beth. And just to give everybody an idea, the level of one of the reasons that we didn't have specifically a deck today was it's internal. Chase has a very, very high sensitivity to security. And sometimes to the point where it gets a little bit onerous, but I would say for the best part, just know that privacy is an issue here. We take it very seriously and our security shows that. And I will get a approved couple of page deck out to everybody that was on the call. And, obviously this is being taped as well. So.
And just as a follow-up to that, if for some reason you can't reach Dora, and you have a couple questions about the SBA programs, feel free to call either of us, but I'd start with Dora. And if you can't reach her, call us or email
Wonderful.
us.
Dora Jalova at Chase.
And thank you, Ray, for putting your email address. We'll be sure to add you to our email list so that you can get the recording and the information that Richard will have for you.
Yep.
Awesome. Well, thank you so much. This has been great. We at the Doral Bar Association appreciate collaborating with you. And we hope everyone has a great rest of their day. I'm going to start recording now. Thank you.
Thank you.